Let's go.
Dr. Rosie Milligan, one of the most sought-after speakers on the circuit today. Her live internet talk show, Express Yourself, is the most provocative, thought-provoking, and talked-about radio show on the internet. There's no holds barred, and Dr. Milligan puts the B in bold. She brings it every Tuesday live at 10 a.m. Pacific and 1 p.m. Eastern Standard Time. Dr. Rosie has been proclaimed the most provocative female writer of the century. Her books include Satisfying the Black Man and Black Woman Sexually Made Simple, Why Black Men Choose White Women, and the book Nigga Please. These books have raised eyebrows across the country. She has authored 21 books and published 350 titles for authors nationwide. Check Dr. Rosie out at drrosie.com for her books, articles, and archives of her internet talk show. Sit at the feet of wisdom. Dr. Milligan is indeed a timekeeper and scorekeeper. She is the clock, calendar, and almanac for Black America. You need to hear her.
Good morning, top of the morning. You're listening to the Express Yourself Hour. I am your host, Dr. Rosie Milligan, coming to you live as we always do with nothing but straight talk. Yes, nothing but straight talk. Good advice that you will not hear any place else. So you want to tune in. My co-hosts I have two wonderful co-hosts today. Number one is Mr. Keith Swanson. People call him the AI man because they don't believe he exists. They've never seen him. Mm-hmm. They keep asking me, is Keith really real? It's interesting because Keith showed up at Black Lives on Tour. He's been at places, and I don't know why you don't recognize his voice. We had a lot of money on the table last year for the person to catch Keith and say, I got him. But nobody got the money. The pot went down to zero. It's building back up. So you guys better try to find him. Good morning, Keith. Keith, AI man.
He's pretending to be an AI again.
He's hiding again. Well, let me introduce my other co-host, Shawanda Bordenay. She's a real estate guru, extraordinary. She buy houses, sell houses. Next thing, she's so multifaceted. She may be building houses soon. I don't know what she's doing. Good morning.
Yeah, I've done that. It's fun too.
Okay. So how you doing this morning?
Oh, I'm doing fantastic. It's a beautiful day out here. I mean, the skies are blue. I just love it. I mean, I don't think it's going to be too hot. It may. Who knows?
Well, they anticipate some rain, so we'll see what happens. But go ahead and throw your number out at the top of the show for those out here who are trying to buy a house, rent a house, sell a house, whatever.
Yeah. And any question you have on a house, I mean, because there's so much stuff going on out here for owners that have renters that aren't paying rent and different things that's going on. So probates, whatever it is, we can handle it. Call me, please, if you have any questions. My number is 310-420-9046. Once again, that number is 310-420-9046. I'll be here to answer any questions that you may have to help you out. So
okay. All right. And I see AI, Mr. Keith, have joined us. Good morning, Keith. I see he joined us, but maybe he's having some problem with his phone. So whenever
Skype is changing their settings. So it's kind of hard to find things. Yeah, Shawanda, you probably have to have some seminars because it's going to be a mess with this real estate.
Oh my God, it's going to be so. I've already seen it. You should see the list. It's crazy out there. What's going on out there is crazy. People are going to need the help, direction. I mean, I'm getting calls left and right for help, and I've been helping so many people. So
okay, I need you to put a whole show back, not next week, but the week following. Maybe we can address the real estate industry.
Oh yeah,
okay,
real estate, inflation,
sure.
inflation, all this stuff is going to be a mess, and they're going to dump people on the street. So it's going to be a mess anyway. Yeah,
okay.
But the AI knows all. Okay.
That's right. Well, you guys, we're going to jump right into our show because we have a great show for you today. I mean, we have someone back by popular demand, okay?
All right.
And that's Denise Ridley. She's medical background as an obstetrician-gynecologist, a financial advisor, and life insurance agent since 2006, certified financial planner in 2013, and a Medicare enrollment agent in 2018. And I'm so happy to be able to welcome her back because you guys, we have so many questions around insurance, around Medicare. And we're going to talk today. Our topic I'm really excited about is 5 reasons to have long-term care coverage and an introduction to the living benefits of life insurance. I'm really happy to have someone to talk about that because a lot of people don't want to get insurance because they think it's just for when I die, and when I die, I don't give a what happened to the folk left behind. But they don't realize that life insurance is for the living. So that's why I'm so happy that people can have a new concept. But most people, they think of life insurance, they think of getting a policy in case they die, I'm going to leave my wife fat and some other man going to be up in the house, all that kind of crazy stuff. But you better be thinking about what's going to happen while you're living if something happened to you. So to my guest this morning, Denise Ridley, how are you today?
Oh, I am fine, thank you. Thank you for that introduction and the invitation to participate in your program again.
Well, I am excited because there's so much information. As I was telling my co-host earlier today, I run into people, their whole conversation is about what's happening with Trump, what's happening in the White House. I keep telling them, you better worry about your black house, not the White House, because that's what's on fire. What we're talking about today is a topic that needs to be shared in every forum where our people gather. This is what's going to really help us. And you know, when I was talking to you, it really made me realize, and the audience will understand later on in the show, I thought about parents who work hard and sacrifice because they want to leave their children a home and leave them their assets only to find themselves that they have to spend every dime they have, and maybe sometime even sell the home to take care of themselves for medical reasons. That was kind of frightening. That was frightening, but it's real. So we talk about the 5 reasons for long-term care coverage and an introduction to the living benefit of life insurance. So you want to talk about some of those reasons, just, tell us what we need to know, what we need to look out for and do.
Okay, I would like to read off the 5 reasons that you listed in the flyer so that your guests know what we'll be discussing. The first reason was to prepare yourself and your parents for a long-term care financial commitment. And secondly, most long-term care coverage for you and your parents cover qualified home care as well as skilled nursing facilities. Long-term or catastrophic illness could wipe out the assets you plan to leave for your loved ones. And fourth, Medicare covers some of the cost of skilled nursing care for the first 100 days. And the question is, can you pay out of pocket after that? Lastly, the concern or the other 5th reason to have it is to consider Medi-Cal and its interaction with Medicare when the need arises. So let's address the first reason. You want to prepare yourself because as an adult, young adult or older adult, you may be responsible for the finances and for decisions regarding the health care of your parents. And preparing for yourself starting at a young age for yourself and your family, is also beneficial. So this discussion is to encourage you to look into this earlier rather than later. And the emphasis is that you need to know that about 80% of the long-term care takes place in the home. Only about 20% of individuals are taken care of in nursing homes, assisted living, etc. But most people are taken care of in their home. Now, it seems fairly obvious. The third issue of long-term or catastrophic illness could wipe out the assets you plan to leave for your loved ones, as Dr. Rosie mentioned. Now, when it comes to Medicare, for the fourth reason, skilled nursing care costs are only covered by Medicare partially for the first 100 days. And after that, you're responsible for the cost, total cost. And can you pay out of pocket after that 100 days? We'll discuss that further. And there are questions regarding Medi-Cal and Medicare and how you can manage some of the costs in some cases for those who are eligible for Medi-Cal. All right. Now I'm going to discuss some statistics. About 70% of those over age 65 will be in need of some form of long-term care. And the average length of stay in a skilled nursing facility is about 2 to 4 years.
Ooh.
The average cost, the median monthly cost in 2021, according to January Insurance, the average cost for a private nursing home room was $9,000 on a monthly basis. So we're talking close to $100,000 a year or more. And when we say median, that means this is in the mid-range, because it could be lower or it could be much higher. It's $4,500 per month for a one-bedroom unit in an assisted living facility, and a home health aid costs $5,000 per month average, and that was in 2021. Now, how do we define long-term care? Long-term care is defined as an inability to perform activities of daily living, ADLs, and you are unable to perform 2 out of 6 of these activities of daily living, which are bathing yourself, continence, meaning going to the bathroom by yourself, dressing yourself, feeding yourself, transferring in and out of bed, and toiletry, referring to your ability to keep yourself clean and maintain good hygiene. And it also considers Alzheimer's and other forms of dementia in this category. So if a doctor certifies that someone is unable to do 2 out of 6 of these ADLs, then they're eligible for long-term care benefits. Or it could be, in some cases, allowable if it's an anticipated 90-day. They know this person will not recover. Now, how are these costs handled? Long-term care policies from decades ago were considered very expensive. They increased the premiums on a monthly basis based on inflation, and also based on the fact that healthcare costs were increasing even faster than inflation. So those long-term care policies from way back when are not very popular anymore. Less than 20% of policies out there are the standalone long-term care policies due to the increased cost. The other reason why they're not popular is because you pay those premiums, and when if you don't use them at all, then you don't get any premiums back. You don't get anything in return. The insurance companies kept those funds if you stayed healthy, and then suddenly suddenly you're gone, then they keep those funds. So other types of policies that have been developed, they have what's called hybrid policies where you pay a lump sum and you get multiples of that amount. For example, a 55-year-old male puts in $100,000 and would get $500,000 of that dollars worth of long-term care benefit. The death benefit in that case would be just under $200,000, and those have some limited appeal. That the details you would have to look into to see if it suits you, but that's one option. Then there is permanent life insurance with long-term care rider, and you're paid out a monthly amount to be used. However, with the standalone policy, you get reimbursed based on documentation of the expenses for long-term care. But with the permanent life insurance, most of them pay a monthly amount, and it's used however you have that flexibility. And there are other permanent life insurances that have what's called living benefits riders, and I'll discuss that later. Additional ways to pay for long-term care are your personal savings. And we mentioned Medicaid, Medi-Cal, health savings accounts, and there can also be an annuity similar to the hybrid policy where you pay a lump sum and you have multiples of that lump sum in amount for the long-term care benefit amount. There's also deferred lifetime annuity where you put in a lump sum and you're guaranteed a certain amount on an annual basis for the rest of your life, even if your original balance and the interest is depleted, you still continue to receive that monthly or annual amount.
And that is that one very expensive?
Now, the deferred, it depends. No, it's a matter of putting a lump sum in that you gain interest on, and it depends on the amount you put in. It's not a matter of being expensive per se. It's just a matter of how much do you want to get on a monthly basis that would suit the lifestyle or whatever need or purpose it is for. So it's not a matter of expensive. You set aside, let's say you have a CD and you decide to put it into an annuity, then you're guaranteed lifetime income. You decide when you want it to start. Does that explain it?
It does, yes.
Okay. And lastly, if someone's a veteran, the VA sometimes helps with, depending on the individual circumstances, sometimes they provide long-term care. So someone would need to check to see if they qualify for any services with the VA. All right. So are there some questions now? Because I'm going to go into Medicare and long-term care. Well, actually, I'll continue now. Medicare, as I mentioned, only pays a limited amount for 100 days. So it's $0 for the first 20 days of each benefit period is paid for by Medicare, and then there's a co-insurance of $200 per day for days 21 through 100. And thereafter the 100 days, you are responsible for all of the long-term care costs. Now, there have been dramatic. You have a question?
Yeah, I do. So we're saying after the 20 days, which is not even a month, then you have to kick in $200 a day out of your pocket?
Yes, that is the cost of long-term care on the Medicare and skilled nursing facility in 2023, and it has been going up annually, in small increments. Okay. Now let's talk about Medi-Cal. That may kick in for individuals who aren't able to pay after the 100 days. Let me give you some background. Since 1989, Medi-Cal, which is a federally funded program called Medicaid on the federal level, but Medi-Cal in California, provides funds to the state to take care of the healthcare needs of people who are low income, and they have eligibility criteria for that. Since 1989, Medi-Cal coverage for long-term care in California required individuals to have limited assets of $2,000 for an individual and $3,000 for a married couple. So this often resulted in loss of Medi-Cal eligibility when people turned 65 and aged into Medicare. But there's been a dramatic change in the guidelines. As of July 1st, 2022, the asset limit increased so that you may have limited assets of $130,000. A dramatic change. Long time coming.
Is that asset mean like including the house or that amount of money in the bank? Because I hear people often refer that if you have more than $2,000 in your bank account, you're not eligible.
Okay, well, that $2,000 is not applicable anymore. And let me go through what's included and what's not included. Okay. So there is what's called exempt assets that are not counted in the $130,000 valuation. And this includes the primary home, the one you reside in. It includes one vehicle, your household goods, and personal belongings. So they do not count that when they look at the $130,000 figure. What they count are the cash and money in a bank account, if you have more than one vehicle, if you have other property or land that you do not live in. So those are counted. So the most important thing for most people to know is that they do not include the value of your home when they count that $130,000. As of starting in January 1st, 2024, there will be no asset limit. Assets will not be counted. So you can look forward to next year when they will not count the assets. So that $130,000 is off the table. Okay?
So does that mean almost everybody would be eligible, right?
Yeah. Well, now
that's good.
That is what the situation is. That is what they've stated. That's in the rules and regulations.
Well, can you have two homes?
Well,
can you have?
Well, I'm telling you what they count now, and going based on that, you could have whatever and qualify. But they won't be counting the assets. So again, starting January 1st, 2024, assets will not be counted. I know it seems unbelievable.
So we're really looking at a person at 65 or whatever, they automatically become Medi-Medi. They have Medicare and Medi-Cal.
Right, because a lot of people, majority of people can't afford those costs for long-term care. That's just a fact of life. And, also they were depleting their assets, what they, or they might lose their home
Right.
for the family, if they pass away. So, okay. So one other point I want to make is that the federal law requires Medi-Cal to recoup payments for certain benefits such as nursing home, home care, etc. And this is called estate recovery. But as of January 1st, 2017, currently, up to now, so this has been in effect for a while, and a lot of people may not be aware, repayment it's currently only for assets that are subject to probate, owned by the deceased at the time of death. So this reinforces your main theme, Dr. Rosie, of living trust, the value of living trust and avoiding probate.
Someone said to me out of state, they heard me do a seminar once, and they said, I don't see how anybody in California would not have a trust just because to avoid the Medicare recovery, because other states don't have that.
Well, you heard of that recently, right?
Yeah.
Yeah. So this is so important, and at least it's one of the main messages that I would like to convey, and it's just in line with what you've been talking about for years and years and years. So, no probate for your assets for recovery. You can avoid probate by setting up the living trust. Okay. All right. So before we get into additional questions.
Let me give a number out right quick. Let me give a number, because there may be someone want to call. The number is 310-928-7733. That's 310-928-7733. Or you can email us your question at innerlightradio@yahoo.com. That's INNER, innerlightradio@yahoo.com. I'm so excited about this show and about this new news. I hope we don't get somebody in there trying to change this, because, this is the way that the average person can have something to leave for the next generation. Because the way it was going before, wow, you'd be stripped of everything. I can't believe, because a friend of mine was in the hospital, long-term care, rehab, and after 20 days, I guess it was, they said she was going to have to pay $200 a day. So her daughter said, well, there's no way we can pay that. I guess she has to come home. So that's frightening to think, because if you can't pay it, they're not going to let you stay, right?
Well, I don't know how they handle it, to be honest with you. But, if someone needs to be hospitalized, there are limitations in terms of, releasing them if they are in need of acute care.
Right.
Right. Okay, so let me speak briefly on the living benefits, accelerated benefits of life insurance. Most people, I believe, understand the difference between term insurance and permanent cash value life insurance. Term insurance is covers 10 years, 20 years, 30 or more years. And okay,
go ahead.
All right, so term insurance is very inexpensive, and at end of the term, 10 or 20 years, for example, the rates go up, such that if someone was paying $10, $20, $30 per month.
Oh, Ms. Davis, could you hold that thought just for 1 second? Because we had a caller that come in, and I want to just take her. Sometimes they're calling from work and can't be on hold for a long time. But I want you to come right back to that. Caller 323-363. Caller 323-363. Go ahead. Okay. Go ahead, Miss Davis. Go ahead. I think the caller.
Oh, you want me? Do you want me to continue?
Yes, continue now. The caller.
Oh, okay. So I was discussing term insurance, that you may pay a low amount, $20, $30 per month for years, and then at the end of the term, the monthly premium goes up hundreds, and over time could be in the thousands per month because you are older, and the older you are, the higher the premiums, and higher the premiums related to your higher risk of dying. But there is some value in having term insurance. I'm not saying it's bad because you know, it's cheap. You just like you have auto insurance to cover case of emergencies. You have life insurance in case of early death at a low term rate to cover mortgages, to cover the survivor lifestyle, children's education, etc. But that is limited in terms of the cost. And at the end of the term, the insurance company keeps 90% of the money that's put into term insurance. So most of them never pay off because people tend to live longer. So let's go to cash value permanent life insurance, such as whole life, variable life insurance, universal life / index universal life, which are more common these days. These may have what's called living benefits or accelerated benefits that you can use during your lifetime. If you are in your 30s and you've been putting money into a permanent policy, some of the policies you put in additional money above the premium, and it's like having your personal savings account within that life insurance policy that you can take out tax-free as a loan. And I use that 4-letter word. I keep repeating. It's not obscene. It's a 4-letter word called LONE in order for you to take the money out without paying taxes. If you do a withdrawal, then you may, if you check the withdrawal box, you may pay taxes on some of those funds. So generally, when you take money out to use for whatever reason, could be for a business. If you were starting your 20s, 30s with this policy over a 20-year period, for example, you could accumulate a substantial amount of cash value, which could be used for weddings, a business, whatever. You have it's your personal amount in there. But some of them have these added riders, which are for chronic illness, which is equivalent to long-term care. In that case, that rider would be allowing you to get a monthly amount or annual amount that could be used for long-term care. And once you use up those funds, then whatever is left in the policy is available to your survivors. There's also a critical illness rider that's included in some, where if you have a stroke or a heart attack, you get a lump sum. And lastly, there's the terminal illness rider, which allows you to advance some or all of your death benefit if you are declared to have a life expectancy of 12 to 24 months. And you can use those funds for whatever purpose you want. Travel the world if you so desire and you're capable.
Do your bucket list, huh?
Pardon?
Do your bucket list off of that money, huh?
Oh, right. Yes. So that's what living benefits are. And some people use it I have those policies just for the living benefits as their savings account to do whatever they would like to, or it could also be used for retirement planning. And you take out the funds on a monthly or an annual basis to use as you wish. And whatever is left in the account is the death benefit. Now, for some of these with the long-term care rider, they do guarantee a small amount, about $20,000 or less, as a death benefit, even if the person uses up all of their long-term care benefit. So that small amount may be used for burial expenses, for example. So several companies add the long-term care rider at no additional cost, and compared to the standard long-term care policy, you don't get anything back if you don't use the benefits. So in summary, these are several options for addressing long-term care. And the long-term care rider, as I said, the insurance companies came up with this several years ago because they don't lose much. Either the funds are used for death benefits or they are used up during their lifetime. So they would have paid out that money at death at the time of death anyway. So they're not. So setting it aside for long-term care is not harmful to their bottom line. And so therefore, that is the end of my presentation, and I'm ready for any questions you may have.
Okay. Keith, do you have a question, or Shawana?
And I'm glad she understands it, boy, because that is complex. I'm glad we have you.
Well, that's why we have advisors. You know who we don't want to mention. Always gets a ton of advisors, and they get blamed for whatever goes wrong.
So they throw their advisors under the bus. We're not going to.
Yeah, that's it. Your advisor accepts the legal responsibility for giving you proper advice, and they have insurance on themselves as well.
You
almost see a lot of understand this stuff.
This should be a PowerPoint presentation once a month in every one of these black churches. I'm telling you. I keep saying you guys preach 52 Sundays a year. Folks still broke, still sick, still. So maybe you should bring somebody in and give them some information, because people pay out so much money and get nothing in return. Yeah. And long-term care insurance is out of the reach for the average person. What I found that some people who start out with the long-term, then they pay for so many years, their income decrease, they retire, they have to stop and help their parents or whatever. Then all that money is lost, right? If they just drop the policy, they've lost all that money. And there are people who've had long-term insurance for 20 years and had to drop it.
Right. Yeah, you lose it either way. You stop paying the premiums, or if you don't use it, you still lose it.
Yeah.
Right.
Let me ask you this for people. I know you said that the first 100 days are covered. Is there any way to get
partially.
the rest?
She said
partially covered. Okay. Is there any way that they can have it subsidized or some other type of program that they can get in?
If somebody is eligible for Medi-Cal, that's the answer to that.
Okay. Yeah, because that's a good question for people that, may be experiencing having to pay too much money when there's other programs to help them.
Mm-hmm. Well, the majority of people can't afford extended care in a long-term care facility, so people do need to be aware that, this is available, and it's even more available now as of January of next year. It's more people will be eligible.
Well, y'all better hold on, eat right, and do everything you can so you will not be sick.
Or you know what they should also do? People should also postpone the care if they don't have to really go, because you don't want to use up your time unwisely.
Oh, trust me, nowadays you're not going to be in the hospital unless you must be there. It's not like back in the day the doctor would put you in the hospital to rule out. Ain't no rule out. You better have it when they admit you up in there now. It's a whole different day. So rest assured, anybody in the hospital really need to be there.
Yeah, post-COVID, it would change the game.
Right. I want to say also, you always go into the hospital knowing what exactly is wrong with you. Don't say what's hurting you at that particular time, because I know at one time someone I knew went into the hospital for their heart, and it wasn't their heart that was hurting, but their heart was hurting after the fact. So whatever you go into the hospital for, that's what they look. And if it's something else that's wrong with you, they're not going to look at it. You have to go back in there for that. So whatever you write on when you're being admitted into the hospital, that's what they look for. So if your heart isn't hurt, but there's something else wrong with you that's forcing your heart to hurt, then they'll never figure it out, because that's all they're looking for is something dealing with your heart. So really be mindful of what you go in for when you go in.
Well, if you go in the emergency room, they do limited things. But if you, go back to your physician, hopefully that doctor will evaluate you in greater depth. Because you're just passing through the emergency room and they just want to get you through. So it's best to follow up with the doctor, or you may need to see a specialist.
Right.
And that's the problem with a lot of people in our community. They use the urgent care, just like that private doctor. They go, I don't want to wait. I couldn't get an appointment. They wait until they are sick. It's really important for people to get checkups and keep up with their health and do what they need to do. And they wear urgent care out in the emergency room, and they feel comfortable, but they're not going to get a lot of. They always tell you to follow up with your family doctor, and most of them ain't going to follow up with nobody because you gave them some pill or you gave them something to take. They going back home and keep doing what they're doing. But that's why they better get some living benefits, get some insurance. But it's frightening when you think of someone caught in the gap, need to be in the facility and have to come home. Because my girl told me that, she said, I'm going to have to check out. I said, why? She said, because it's going to be $200 a day if I stay in there long. And this was someone who had an amputation. So it shocked me. So she said, I don't know who's going to take care of me when I get home. I need to call my different friends or see if my daughter can take off work. Folks, this medical stuff, it's no joke. That's why I wish that this presentation could be presented. Because these church folks are about the sickest people I know. I ain't never seen so many people sick as those folks and going to the altar every day. Oh, I know they're going to call and be cursing me out about that, Keith. I shouldn't have said that.
It's tough medicine, huh? Yeah. Well, that's true, because a lot of, the majority of people nowadays are older, okay, because there's a shortage of workers, of young workers out there right now for trucks and all kind of physical stuff. So, so the majority of America is going to get older really, really soon. So it's time for,
1 in 6 will be over 65 by 2030.
Oh, my goodness.
Yeah, so
gosh. Don't start.
The baby boomers.
Baby boomers, yeah.
One question I had, Keith mentioned how, knowledgeable this is. Do you think this presentation, in terms of the terminology, would be suitable for the people in the church?
Yeah, the thing is that you do a good job of explaining all these loopholes, because I'm sure when you read it and you study this stuff, it's all complex, but you can actually simplify it in a step-by-step manner.
She did.
So you actually do a really good job of explaining it, because I know this stuff, to understand, it's not that easy. You make it sound easy, but it's not. So it would be, because they wouldn't understand this stuff at all. If you put it in front of them, they'd be confused. Yeah. So, or need a lawyer, something like that. But the thing is, you actually break it down in a very simplified manner. So.
Okay, that's what I wanted to know.
Yeah.
Yeah, and it's just like ABC. When you stand up and you tell people that Medicare, because most people think they have Medicare, they have carte blanche. When I got that little red, white, and blue card, hell, I thought I could get on the bus with it.
You can get on the bus for less.
Yeah.
35 cents.
Yeah. But they think it's a cure-all. Do you realize the average person has no clue that if they're in a skilled nurse facility, that they may have to pay something. They think they got it made. They have no idea. So the way you break that down, I'm telling you, it's so simple. This is what happens. Their eyes will pop open. Wait a minute. I can only be in there. Okay, then what do I have to sell? What do I, and I'm glad things are changing, because here's what happened in the past. People tried to save a little money like their parent told them for hard time, for a rainy day. And then you fall into hard luck, or your Medicare is running out, your Medicare. You apply for Medi-Cal, and they say, well, you got $6,000 in the bank, so you're not eligible. That have always been ridiculous. And people are saying, well, I thought you ought to want us to try to save. No, you want us to have nothing. So I am happy for this change. So whatever legislators are pushing this change, just like they pushed the one that if you have a trust, Medicare can't recover. I mean, that sums up for that. Because parents was taking their money out of their accounts, putting it into their kids' account, so they could get Medicare, and then turn around, the kids spent their money. I mean, I know all about it. It's been that kind of mess out here. So I change. So I think these church folks really, I wish you could get in there and let them know how important it is, because with living benefits, that could help them keep that house that they're trying to leave for their children or grandchildren if they have a catastrophic condition, by pulling that money.
Well, I will get back to you outside of this call regarding, doing something at the churches. So we'll talk about that. One other thing I want to mention is, Ms. Bordenave mentioned regarding going to the hospital and being aware of, what they tell you. Oftentimes it's good to have somebody who's a little knowledgeable about the healthcare system, who can help advocate for you initially and along the way. Because, sometimes things are said or done, and, it's possible the doctor may be trying to do their best, but that's not always the case. So having somebody there to assist you in understanding and helping you make decisions is something to consider.
Well, let me share an experience that I had. One of my best girlfriends, she was in and out of the emergency room, seeing different doctors, seeing different special headache, chronic pain, just having all types of issues. So she asked me to go to the doctor with her neurologist one day. So I went, and he said, "You see her having these bad headaches?" She said, "Yeah," and it's like I can't hardly see, that hurts so bad. He said, "Well, I'm going to change your medicine." And I said, "Hold up. Why we keep changing medicine? Well, we need to get to the root of what's causing this." He said, "Well, I did, I think he said an MRI or something he had done." He said, "But we didn't do it with contrast, without contrast." I said, "Well, then why don't we do it with contrast? So it must be a reason that contrast makes a difference. Why don't we do that before we change her medicine?" If that had not happened, the medicine they were going to put her on, the ophthalmologist told her later, she would have been blind by now.
Oh, my God.
You're so right. You need an advocate. That's why I tell people when they're making their power of attorney for healthcare, I said, you need the tiger, the gorilla of your family. You need somebody who can be a strong advocate for you. Because sometimes you just have to say, sometimes doctors are so busy and and a lot of patients don't know how to articulate what's going on with them. And sometimes by their daughter, somebody being there, when they explain a little deeper, then it helps them to understand, because they're moving at a fast pace. You got 50 people sitting out there in the emergency room.
Right.
Right.
So that's a good point, to have an advocate. So I'm saying to every listener out there, you need to find you a medical advocate, somebody for you. It is really important. Right. It is really important. But I really want to see these dialogues go on in the churches. And, it would be good, Ms. David, if that's the type of information Maybe we need to write a curriculum. It could be nonprofit too, to teach the kids in high school. They need to know about this before they get out of high school. Would you agree?
Definitely. Even now, I just heard in the radio program how so many young people are returning to their parents' home to live with their parents because the affordability of their own residence is out of reach.
Yes.
So, even if there's planning ahead, the high cost of living in California, makes it difficult for young people. They even delaying having families because of the affordability of life.
Right. I agree with that. That's so true.
And you know what I found? I had a lady once, she was getting depressed, and I said, what? She said, I just worked so hard, and I just shouldn't be in the state I'm in. And that's what I'm hearing from so many people over 60. And I have to calm them down and say, wait now. You didn't create this economy.
Nope.
You didn't increase this gas price. You went to school. You ran your business. You did what you were supposed to. None of us saw the cost of living coming like this. Because I remember years back, I thought I could just lean back on my Social Security. But people didn't know that Social Security is not so secure. Not now. So I find a lot of elderly blaming themselves and getting depressed. I'm glad we brought that up because I hear that all the time. They feel like, well, I got this degree, I've done this, and I'm struggling because they think other people are doing well. But a lot of people, most people are struggling in this country. And many are standing in the gap for somebody in the family. You got a little bit, you won't have it long. I know I have a family, and they always tell me I work too much. You need this, girl. You need to stop. You can't take it to the grave.
Whatever,
I said it ain't gonna be nothing to take to the grave if I don't stop here and catch our house note up and keep it. Ain't gonna be nothing. But I'd rather be able to stand in the gap than for them to have to stand in the gap for me. So I've learned not to complain. I work. I try to be a good steward over what I have, and I do share.
Yeah, that's a good thing to talk about too, Dr. Rosie, is what we go to school for, because a lot of kids, they go to school for business and finance when they go to college, but really going for something that's going to be beneficial for us, and also, creating something for the elderly so that they can have something else to do, because even though you're retired, even though you don't have anything else to do, and you don't want to do anything, you probably do want to do something, but you don't know what to do. And there's so many things out here that they could be doing and just having a better life, because the reason why you work so much is because you love it.
I love it.
You actually love it, and it keeps you young. Look at you. You're young and vibrant, and no one and I think if we put together a program for the elderly, especially people over 60 is not old, but 65, 60, 65. So
the closer you get,
the closer you get to those ages, the younger it is, right?
Yeah, the younger it is. Yeah. Move it down a notch. Yeah.
Golly, it's like crazy. But anyway.
But I can see this program.
Can't you see it?
Ms. Davis, I can see this program. I can see it starting with the young people, and they can understand how critical it is for them while they're in their little money-making era.
Yeah.
Buy this insurance for your parents. Then they don't. Oh my goodness! It opened up a whole night. Then they don't have to depend on you.
Yep.
Right.
Isn't that incredible?
Yeah.
Well, Miss Davis, you got something here. You got something here.
Yes. You like that, huh?
Yeah, I like that. You got $1 million idea right here.
At least,
I know. That's what we're going to talk about it offline.
Because I can tell you, nobody knows this stuff like you do. It do me nobody.
Right.
Nobody knows stuff like you. You should. You should have a Patreon and just do weekly talks just on this stuff. Get paid for
That's
it.
really the truth.
Yeah.
You ever thought about that, Miss Davis, doing a podcast?
Yeah, do a podcast, put it on Patreon, and charge them $10, $15 a month. Just
Well,
because there's
now,
thousands of people that need this information.
uh, are you doing podcasts? In terms of getting into the market, I would need to look into how I would get the audience.
That's that. Yeah,
That's easy.
that's easy. Yeah,
Okay. Oh, okay. Well, I'll
that's
talk to
easy.
Dr. Rosie since she said it's easy.
Yeah, the audience come when you start speaking.
Oh my God, they looking for stuff like this. They
They're looking
so
for
They want to
confused.
know. They
Yeah.
want to know,
Okay.
and they want to
Okay.
know a little bit more than just hearing it here. They want to know more details, and
Yeah.
they want to hear it all because
It's not
every
just us.
year, every week, something's happening.
It's not just us of this color either. So
No,
if one
it's everyone.
if 1 in 6 people are going to be over the age of 60, that's a huge market.
Mm-hmm.
That's going to
Okay.
get affected by this. Yeah.
Okay.
Yeah.
Well, I'll talk to
All
Dr.
you need is
Rosie about that.
and all you need is a small percentage. You don't need millions of people. All you need is thousands of people. So what I'm saying is, all you need is a small percentage. But the thing is, from what I listen to stuff like this all the time, right? And nobody talks about it. Nobody can break it down, to this level, to where the common people can actually understand it. So you got something there. They're right.
And,
Okay.
and you know
Well, I
what?
appreciate hearing that.
Yeah, and I can see getting grant for this type of program because
Mm.
people in country looking at the fact they don't want people that everybody end up on the system. They want people to pay for their life that they don't have to draw from the state or from the government. So
Right.
Right.
that type of pitch, I believe, will warrant some good grant money. So the proof is in the pudding. That's what's
Right.
happening to people. Most of them can't afford medical insurance.
Mhm.
So
Oh.
I just think you have something. I really
Yeah.
do.
Okay. Well, I will set my appointment and consultation with Dr. Rosie.
With Dr. Rosie. You got two of the best money makers on the planet right here. So
And you know
if
what
there's
I'm gonna
money
do?
in it, they'll find it.
And I throw what you doing
It's so funny.
as a prompt, Shawana.
I'm not wrong.
I throw that thing in AI. It'll write your goals, your description, your
Everything. I know that,
statement.
girl.
I'm trying.
I love AI. Oh, I love him.
It'll write
He
your
and I
whole
are best
thing.
friends. Is he your friend too, Dr. Rose?
Oh my God! I wake up.
Don't be taking him from me now. Is he cheating on me? No.
Yeah.
Yeah. And we're gonna have to, Dr.
Oh,
Rosie, at some
God.
point we're gonna have to do a show on that about school because it's really upending
Yes.
education right now.
Yeah.
Mhm.
Yeah. Miss Davis, Tim, are you dealing with AI at all right now?
No, I haven't.
I want to
Oh,
teach
God.
you. It's gonna blow
Yeah.
your mind.
Yeah.
love
Okay.
it.
Well, do I need to set up a separate appointment for that?
Yeah. First, I want you to do My Tech Academy next Tuesday. We talk about free grant money and using AI, and it's gonna blow your mind how easy it is.
Now that's
So-
going to be at the same time?
That's gonna be from 10 to 11 next Tuesday.
Okay.
Okay.
I'll send you the information.
All right.
I'll see.
Sounds
Now, is there any closing remarks you want to leave with our audience?
Oh, the main points are that the long-term care rider can be available through life insurance, and I encourage younger people to look into that.
Mm.
And for the older people, depending on whether they're in their 60s, 70s, it may not be reasonable or cost effective. But to prepare for those who will be caregivers, I encourage them to, look into permanent life insurance with a long-term care rider. And the second point is I wanted them to be aware of, Medi-Cal in California and Medicare and the loosening of the eligibility requirements and the fact that as of next year, assets will not be counted. The third point.
Oh, I can get something. Finally, I can get something.
Yeah. And the third point was regarding setting up a living trust to avoid probate. This mainly applies this year. To avoid probate, so that Medi-Cal does not attach your assets, to recoup through the Medi-Cal agency.
What do you think about encouraging young people to get insurance? Because a lot of the elderly can't afford it. But you're going to reap the benefit. They'll reap the benefit. So they should go ahead and pay for it for that parent.
Well, that was my first point, that I encourage younger people to get the long-term care rider with life insurance. Because they can, use the cash value for that or for other things. There are multiple options when you have that, what I can say is like a personal tax-free savings account within the permanent life insurance policy. So that is a key point.
It is. It's something on the board. What's on the board, Keith?
Let's see. Hold on a second. Okay. Why is all of this so damn complicated? It's like life in general has turned into a game of Monopoly on a board game. It's Dr. J.
Well, I said to some people that helping your child to get into college, through that process, you need a college degree to even do that.
Yes, you do.
You can't hardly help a sixth grader now.
Yeah. And with regard to this, there are lots of regulations that are required for life insurance policies so that people do not, to avoid taking advantage of people, especially the elderly. There are so many scams. So insurance is a highly regulated industry. So that's why it is complicated, and laws are made by, sometimes the laws don't make sense, like that $2,000 limit didn't make sense for so many years.
Right.
Yeah, and that 70 and a half is when you start RMDs, for people who have retirement accounts. Why 70 and a half? So not everything makes sense, because some people are lawyers and some people are not, who are making these laws and putting it together. But the bottom line is that the insurance industry is highly regulated to protect health and life insurance.
Oh, that's good news. That's good news, to get those scam audits, But I tell you, I have really, did you guys learn a lot, Keith and Shawana?
Oh, yeah.
I'm going to have to listen to this again because it's a lot to process. So
yeah,
it is a lot. Yeah.
We're going to
I learned a lot.
Yeah. It makes a lot of sense. So we want people, we want to hear your voice all over. We want, when people think about having this knowledge, we want to brand you, okay?
Yeah, and a lot of, like I said, there's a lot of younger people that probably need to know this stuff that have older parents, because trust and believe the first thing that's going to happen is when something like this happens, the parent's going to come give it to you anyways.
Right.
Makes sense. Yeah.
And the first thing people tend to do when money gets strained is drop their insurance, and we keep saying, don't do that. If you borrow money to do other things, borrow money to keep your policy in place, because things will change, and you may not can get back and get that same deal you had. Isn't that right, Dr. Davis?
Yeah, if you're older, if you lose the policy. Yeah, so it's best to get life insurance when you're younger.
Yeah, it makes sense. It's a gamble. Yeah, got to remember it's a gamble. They're taking a gamble, and your odds are better for the insurance company is when you're younger. Okay.
I
So
put life insurance on my kids when they were young. So when I got old, I said, y'all need to pay for it on me. I paid for y'all all these years.
mm-hmm.
Y'all got to start using these kids. I'm gonna repeat that.
Yeah. Well, yeah.
I do. I have a group of young kids. Okay.
You got to start using them.
It's not just my kids. I have everybody's kids. They help me all the time. I love it.
Yeah.
Miss Davis,
Yeah.
you wanted to make a comment?
Yeah, one more thing with regard to the young people who have life insurance set up by their parents when they're children, is for them to reevaluate that. And oh yes, this is one point I meant to say, that you need to review your life insurance policy periodically. There are people who have policies out there with their ex-husband or dead spouse or, dead beneficiary. They need to reevaluate, and check their beneficiaries. Life insurance benefits are generally tax-free, and they, if it's set up properly. But, for young people, it is important to get it at a young age, and they may need to have additional insurance, because what we set up for a child, with inflation nowadays, and living longer, if they have a $100,000 policy, that isn't very much, if you look at it 10, 20, 30 years from now. So I encourage young people to get additional insurance, when they're in their 20s and 30s.
But that makes sense. And I also thought, like, when people have small children, when they're struggling about what type of insurance they should have, if they can afford. Now, you tell me if I'm telling them right. I tell them it's okay for them to get a term policy cheaper, but also get either permanent life or some other kind of insurance, because at some point they're going to drop that term, because when they get a certain age, the price don't go so high. But they need a large amount of coverage if they have small kids, in case they die before the kids get 18 or out of college. So they might need more than one type policy. Would you agree, Ms. Davis?
Yeah. Oftentimes you can add children to an adult policy, a child term rider, for relatively small amounts, and oftentimes there's no additional premium to add the child. The death benefit would be isn't large, but it's basically just in case, because there's such a low probability of your child passing. And with some of the permanent policies that you can have in addition, and you pay for those, once they are 18 or 21, then the death benefit can increase, and that's part of what's written into the policy. And, like you said, they could take over paying for it once they start working.
Right. Yeah, they're going to take over paying for theirs and mine when they start working.
It's their money. I don't know why they wouldn't. It's their money.
Yeah, it's coming to them.
It's coming to them anyway.
It's easier to think of it that way. Easy for you to say, Keith, but they don't necessarily think that way.
No, because they got to get that iPhone and all them gadgets that comes out. They ain't got time to fool with you, Keith.
The thing is, they have to look at it as an investment, right? Because it's your body, but it's their investment. Because when you go, say your policy $100,000, $200,000, are you willing to throw away $200,000 for a few dollars a month? That makes sense, does it?
Are you willing to have to come and take care of me because I don't have insurance to pay somebody to do it? We're going to have a whole lot of ways to start looking at this. And I think if young people understand that, they will be willing to get together and pay for insurance for their parents so they can have help. Yeah. Because 2024, we ain't going to have to worry about help is on the way.
Yeah, no. I wouldn't spend too much time talking to the 20-year-olds because I don't think they are listening.
You're right.
But when they get a little older, in my experience, they are more receptive and they can grasp the concept of what, we're talking about.
Like once they start a family, they may start understanding, right?
Right.
Yeah.
Yeah. And sometimes you may choose to continue paying for their life insurance if they're, struggling and doing what they need to do.
Yeah.
You may continue to pay until they're in a better position.
Right.
That's where you have to sit down and have a conversation as adults about this
Yeah.
kind of
Well,
stuff. Yeah.
I still pay for two of mine because I'm the beneficiary, so it don't make me no difference.
That's a good motivation.
But it's like self-interest, huh?
That's right. Well, you guys, look, this has been so awesome. Clock on the wall said that's all. Miss Ridley, we thank you so much. You've given us so much information. You must come back, but I can see you with a podcast, newsletter.
Yeah. That would be good. Yeah, on a weekly
All over
basis.
the place. So
Yeah, because
Okay.
it's too much.
Well,
It's too much to squeeze into.
okay, I'll send you all the information. Yeah.
All right. Thank you very much for allowing me to participate.
Thank you. You guys have a great day as you go on your way. All right. Have a great day.
Okay. Bye.